to it. This may be a little shorter than typical than normal today. So let's get the live stream going here on Facebook, and welcome everyone. Thank you for joining the call and taking time out of your Monday to listen and learn that, and we can get to know each other better and possibly work together in the future. One thing I want to say, this everything on this call is not financial or legal advice. It's simply professional sharing what we do. And let me get my screen share up here, and we will jump right into this. First, I'll introduce Eagle City Multifamily and what we do. And here's the team. Our Eagle City team is Nikki and Dr. Sanjeev Mal and Asif Kumar. And our speaker for next week is Nick Kitson, and he has a very interesting topic on apartments. He's here in the Dallas area as well, and that's where we're based out of, is the Dallas area. And I'll be presenting this evening on financial spring cleaning is the topic. So there's some very interesting things that you and I can do to prepare for our financial future. And a little what we do here at Eagle City Multifamily is we purchase apartments. So we have a team that is continuously underwriting deals. That simply means we're looking at deals to make sure that they make sense financially to purchase, and then to offer the deal to investors like you and I. We do syndications, and it's where we pool our money together to purchase apartments. And I'll talk a little bit more about that in just a moment. And so I'm a co-founder of Eagle City Multifamily, real estate professional with a sizable multifamily real estate portfolio in Texas. And my professional background was in metal manufacturing. I was president of Kulp Steel for years, and then CEO of Indigo Industries, also a metal manufacturing company in the Dallas area. And some of my hobbies are fitness workouts. My son is a bodybuilder. He has YouTube channels, and he's really into that. So that really helps me as well. And I'm all into self-improvement and education. If you'll stay with us to the end, one of you will receive a gift as usual. That's something we do each meeting. We have these meetings every Monday evening. And as I said, Nick Kitson will be our speaker for next week. And so let me jump right into our financial spring cleaning. There's a few things, as in spring, we look around, and so I'm going to move through this pretty fast. So if you need to take notes or whatever, feel free to do so. And it'll also be recorded, so you can go back and look at this again. So spring cleaning, we look around typically and make some changes on things that need to be cleaned up or changed, right? And see if they can get this to go to full screen here. Okay, something is going on with my screen share here. I'm trying to get it to go full screen. All righty, so I'll just move ahead here with, I'll get this technical thing figured out here in just a moment. And I believe that all investors should understand what they're investing in. And that's one way to plan for generational wealth, to plan for our future, our financial future. There we go. Awesome. Technical difficulty resolved. And so here's what to expect in this presentation is we're taking a look at our financial plans, where I am and where I want to be, and how to get started closing that gap. And I'm in the process as well, so I'll be talking about this along with you guys. You're welcome to ask questions, raise your hand, post questions in the chat as I go through this, and we'll have some time for questions at the end and during as well. So I'll try to my team and I will try to watch here for questions as you have them throughout this presentation. Are you investing? Why should I invest? These are some of the things that I'll be covering in this presentation, looking at some investment vehicles. So that's what to expect in this presentation. So I'm going to move through this fairly quickly. And so please feel free to join in the chat, post in the chat where you're tuning in from, and post your questions in the chat as well. And so we're looking at investment vehicles. So the vehicle that we currently have may not be the best vehicle to get us where we want to go. Maybe it's an old vehicle like the picture posted up here. Step one, am I investing? Step two, why should I invest? Step three, find the best fit. And step four, how do I get there? And so why do I invest now is I want to prepare. And I think everyone should prepare for your future, because guess what? Nobody will do it for you. You can learn it. You can listen to other people's story, but no one will step in and set the investments up for me. And that's why it's very important to take a little time every so often to learn what we can, to find the best steps or the next step for me to get closer to where I want to be, right? So why can't we retire early and wealthy? There's a lot of people that have done that, and we're all on this path together to find a way to collapse the distance between where I am and where I want to be. And so let's take a look at this. Let's take a look why we do what we do in apartment investing. So I'll talk a little bit about what I do in apartment investing and some of the returns. So here at Eagle City Multifamily, we look to double our investors' money, and that we don't guarantee. But the thing that's better about some of these other about apartment investing than some of these other investment vehicles. So if you can see here, we can I'm invested in mutual funds. And by the way, I have some mutual funds I've invested in several years ago, like 6-8 years ago, and they're just about the same as they were 5 or 6 or 8 years ago. And that's not a very good return, right? And REITs are another thing. A REIT is a real estate investment trust. And that is basically a mutual fund in real estate, right? So they take lots of properties from different places and they pool them all into an investment fund. So it's basically a mutual fund. Some do good, some don't do as good. And you get the net benefit out of all of those investments in a REIT. And there's lots of financial advisors offer REITs as investment vehicles. But one thing that's different about what we do than a REIT is we do one property at a time. So our team analyzes the property. We analyze the area that the property is in. We analyze the household median income in the area. We analyze the employment and everything that affects the apartment deal that we're offering at the time. And so we get really specific about the potential profits in each apartment deal. So one thing that's different about us than a REIT, or real estate investment trust, is that they have a certain amount of money, of funds that they need to deploy. And so it's likely that they would be less strategic about
the capitalization fees.
Less strategic about the each individual investment. I'm not saying they are or aren't. I'm just saying it's likely for that to happen in a mass pool of real estate. And so you can still invest in multiple apartments just by, in the way we do this syndication model. So we take one deal and people like you and I will pool their money together from whatever source we have. You might have liquid cash, or you might have a retirement account. A lot of people will convert their retirement account and invest. I'm not saying cash your retirement account out if that don't make sense. You can actually transfer it to a self-directed IRA, or I'm not a retirement fund professional, but I know some that do it for us, and Quest Trust and some of these companies that take care of retirement accounts for our investors. And once you do that, you can tell your retirement account company where to place your retirement account. And so you can put some in different deals. So the thing about it, you don't have to put it all in one deal, and you can put some, and typically our minimums are 50 to 100,000, some are 75,000 minimums typically. And we have people putting over $1 million in one deal, right? It just depends on your financial level as to how much you're comfortable investing in a deal. And we give you the option of looking at the deal and knowing where the deal is. You can drive by the deal, buy these apartments, the ones that you potentially would invest in, and it's a real asset. And every investor is a direct owner in the apartment deal. And so I feel like my investment is safer in an apartment syndication, whether it's a syndication that we are doing or others. If there's other good apartment operators out there that you can invest with as well. So, but that's one reason we put this show on, is to help educate people on what we do. And we offer these investments as they come up, typically a couple a year, so not very often. and we're not offering a deal on this show, right? We're simply talking about it. We get to learn to know each other better, and then let's move on down to stocks. And as you know, stocks go up and down a lot as well. I have stocks and lost, some, about 30% or so in some recently, right? And so stocks are volatile, and apartments are a little safer than typically. If you're in a good area, a good deal, they're safer for a few reasons. And one reason is when inflation goes up, your value goes up, your net worth in that deal increases, and the rent from the tenants stays even or goes up, and they very rarely go down. Right, so it's a little safer than even some other assets in real estate as well. And then we talked a little bit about retirement accounts, and that's a way some people will invest in apartments. And there's also a thing, infinite banking. So if you've never heard of it, I'll explain a little bit about the infinite banking system. And I am studying that myself, so I'm not the guru on infinite banking, but I know some people that are, and I can get you connected to the right people. So basically, there's a guy, Nelson Nash, that wrote a book, Becoming Your Own Banker, that describes the infinite banking system, or some people will call it a family bank. And this is one of the tools that a lot of the wealthiest families in the world use, because these have been around for hundreds of years, like way before the IRS. And so there's a lot of tax advantages in this system. And the average American could do this. Most average Americans could do this, could start their own bank, and eventually they borrow money from themselves from their own bank, and they pay interest just like you do from a bank, and it builds up and it compounds. And eventually, so Nelson Nash in this book talks about how he started his family bank, and it's done with a dividend producing a whole life insurance policy. There's a certain kind of life insurance policy that they do this with, and that's the vehicle. That's the big dump truck that you see on the screen. That's versus the little race car. So this family banking thing is not necessarily a race car that gets you there fast and quick. It's more like this big dump truck that gets you there slowly, but for sure, if you do the right things. And it takes probably, I would say, 5 to 15 years to get the typical one set up large enough to where you could actually do your home loan from, for example, right? But as I said, I'm not the professional on the banking system, but I know some people that are. And a great place to start is Becoming Your Own Banker by Nelson Nash, and that's a book. It's on Audible. I use Audible a lot, so I listen to books, and this is a really great book. And he's sort of like the father of the infinite banking system, if you will, in our current day, right? This has been around for hundreds of years, so He's definitely didn't invent the wheel, but he explains it, and he uses a lot of average American like dollar amounts, like the average American wage and the average American loan size, like for your house and your cars and your whatever you're borrowing money from. And I will say it's a little bit like losing weight. So let's look at losing weight for a moment. Everyone knows how to lose weight, right? We know the things that it takes to lose weight, but if we don't do the simple things that it takes to lose weight, we won't lose weight, right? And it's a little bit the same in infinite banking or starting your own family bank. The steps are simple to take, and there's a life insurance benefit, and they say you can set it up generational wealth, right? So, and that your bank, after the 10 or 15 years of where it's set up large enough that you can actually do large loans. Now you can speed the process up if you have more cash up front. You can create a larger bank a little faster, but this just the average system for an average American that doesn't have hundreds of grand sitting around to do a front end loaded policy, what they call it, is can also eventually be where some of the wealthiest families in the world are, and they got to where they are partly based on this system. And all the earnings that are earned are tax sheltered. They're like not taxable because it's classed as a different class, right? The money that comes back to you, it's different terminology. So again, I'm not the guru. You need to do your education for yourself to find out more about it. But that is a very great way to create generational wealth long term, and in not so far into the future, right? We get 5 years down the road, we look back and we're like, wait, if I would have started it back then when I found out about it. The same here. I heard about it at a Rich Dad Real Estate Education course by Robert Kiyosaki, and they told me about it, and I heard about it there, and only till now did I do my homework and figure out what it takes to start my own family bank, right? And so how do I get there? Moving on to getting started or getting to the next step. And one thing that will help us get there faster is government incentives. Some people call them loopholes. I call them government incentives that the government gives tax breaks for, right? And if the government wants us to do something, then there's less tax for it. Look at the tax law, have more children, get more tax benefits, right? They want more people in the workforce, and so they incentivize certain things. And so there are certain things we can do to get there faster. And I haven't it. There you go, Greg. Drill oil wells. That's a step. That's a big step. So I'm going to stop sharing my screen here, and we can take questions and talk. Unmute yourself, raise your hand, post your question in the chat. Let's talk about it.
Hey, Herb, on your on the infinite banking, that's driven by a whole life policy, a whole life dividend producing policy. Is that what it's driven by?
Correct. That's the vehicle that keeps our money. And like I said, you'll have to do your own education on this and find, and there's some YouTube channels that provide a lot of good information about it as well. And there is a YouTube channel, Life 180. The name of the YouTube channel is Life 180. I can post it in the chat here. LIFE 180. And that's a name of a YouTube channel by Chris Kirkpatrick. And I don't know him. I'm not telling you to, base your life off of this person, but I do know he provides some very good information around the subject. And so one of his YouTube channels, one fairly recent YouTube channel or post he gave gave 3 different policies that 3 different options. Here, I'm trying to post this in the chat here. Yeah, Life 180. There you go. And so, Jared, do you want to look it up and try to post the YouTube link, the YouTube channel link? And so there's, I think it's a 1040 policy and a 1090 policy, and I think a 4060 policy. And then there's a front loaded policy, which you have to have more money right up front, but you can put it in there and it's more safe in there because you can still borrow against it. You can still use it like it's yours. But it stays safe in this policy. I guess they do all the legal work for you. It's sort of like you're hiring a legal team to do you're starting a bank. And so any questions about it? I probably can't answer all your questions, but I can at least point us in the right direction. And you're welcome to reach out to me over the next month or two. I'm doing the research and setting up for myself as well. So you're welcome to reach out and find out more about it as well. So all our apartment investing, other investments, other purchases could all be done through this, and all the returns go into this pool of money, this policy, and accumulate and grow. And it's an amazing product that the banks don't push it because that would take the place of them, right? The IRS don't push it because that would limit their returns, right?
I like them the best.
But it is available. So
I ain't drinking, okay?
anyone else have any questions? Anything you want to talk about around apartment investing or anything?
Drew, what do you think the bump on the Fed interest rate's gonna do other than raise the interest rates?
What it will do like around apartment investing?
Yes.
I think it'll squeeze a little tighter onto some apartment owners that are not prepared, like owners that purchase with bridge debt or variable rate interest loans, right? Because it'll drive that interest rate up a little more than it is already, right? And if their debt coverage ratio, in other words, if the increase in interest consumed all their profit, going up more will even get worse for people like that. So we're not in that position, but there's plenty of people that are.
Yeah, things might go on sale, huh?
They are already. Oh, yeah. Yeah, there was several deals that got foreclosed on by operators that just over leveraged or just didn't have the rates fixed. Or, or a multi, think several things that multiplied on themselves, right? Maybe they could have handled one problem, but two or three caused it to, not be able to make their payments in default. And I will say these commercial banks are quick to call a note on a non-performing note. They want their returns, right?
Especially after Republic today. Especially after another bank going south.
Another bank, right?
Yeah.
Yes, another bank went down yesterday or
Public.
today.
So in other words, a lot of operators or syndicators just didn't have the prudent reserve to handle the little hit in interest.
Right. Correct. Yes. And it's a self-leveling system. In other words, one thing is good that the apartment is in the hands of a good operator because it's a home for many people, right? There's sometimes hundreds or thousands of families living in these apartments. And so I feel like the government views it as important that the apartment is maintained, right? And it's good housing for people to live in, right? Because if the operator can't make payments and then he can't keep it up, right? So it's a self-leveling system.
Now, is that obviously that affects when something goes into foreclosure like that, that affects the GP and all the LPs. In other words, it affects the whole.
Oh, absolutely it does.
Okay.
Oh yes,
Affect the GPs, but yes, it does. I mean, it
Oh,
affects
it does.
you lose your reputation.
Very important to find a very good quality GP.
Right. Absolutely. And it's a team sport. There's some people that do try doing this on their own, and that's it takes a team typically. A GP team that is
Investment books.
good at different things. They can support each other in tough times. Yeah. Hey there, Devin. You have a question? I can hear you. DeLorean asked a question in the chat. I'd be interested in investment books and or investments any of y'all had that turned out good. Anyone on here with any books they've read that have been very good in investing? I could put a list of books together. I read a book every week or two, a new book. I could put a list together. Not right here on the call, but I've read lots of books that are good with investing. Okay, DeLorean posts Tony Robbins' The Money Game. I've read that one. That's a great book. I listened to that one. Yeah, so he talks about investments that are better than others, right? He's interviews some of the world's top fund managers and advisors. That's a very great book. Yeah, so any other questions or thoughts around apartment investing before we wrap it up? Okay. We're gonna bring the spinning wheel on here. And see who the lucky winner is for Starbucks card tonight. All righty. Here it comes. Greg, Devin, DeLorean. The wheel is spinning. Can you see it spinning? Greg Hillman. Yay, way to go. Look at you. $10 Starbucks card will be coming your way.
I love it. I'll split it with you, Herb. We'll go drink that together.
All righty. That is $10 Starbucks card will be emailed to you. Just open your email up and scan it at Starbucks and it's paid for. Anything up to 10
Nice.
bucks.
Oh, thank you. I'll
Welcome.
use that.
All righty. Anyone else before we go? Have a great night. See you
Thanks,
next
Herb.
week. Have a great speaker coming on next week. Bye.